Hey guys, it's TJ Vitense here with the Strategic Real Estate Team, and I'm sitting here with Christa Sweeney of River Valley Bank, and today we're just going to kind of go over some questions you want to ask your lender. Actually, I have in front of me a little sheet of questions, 10 questions you will ask your lender. If you look right below this video, if you're on our website, there should be a little PDF link download that you can print off all these questions. So let me introduce Christa Sweeney, River Valley Bank.
Hello.
We'll just jump right in. I'm going to kind of ask her these 10 questions and maybe branch off a little bit and ask her, some questions about what people need to bring in, the things they want to ask you and whatnot. So I guess let's just start out. We'll do question one right here. Can you kind of explain the difference between a pre-qualification and a pre-approval?
Yep. A pre-qualification basically is a phone conversation, or even you and I just sitting down and talking. You tell me how much money you have, what you make a year, what you think your credit score is, and I then say, well, yeah, based on that information, you would qualify for a loan. Okay. It basically means nothing. A pre-qualification isn't any guarantee that you can get a loan. It's just kind of like, yep, it sounds like it. So right. A pre-approval is I've verified your income, I've verified your assets, I've done all the, run it through underwriting, and then I know for sure that, yeah, you will qualify for a loan.
Okay. So basically a pre-qual, it just means you told them stuff, nothing's verified. Pre-approval, if you're going to write an offer, it looks a lot better if you're going to send a pre-approval, basically. Yeah. Is it better if the people come in and meet with you and give you the stuff? Or how would you prefer? Would you prefer face-to-face, over the phone?
Either way works. Especially when you're a first-time home buyer, though, sometimes that first initial meeting face-to-face is good, just because you're going to come up with a lot of questions. And I have to have the information anyway, so somehow you're going to have to get it to me. Okay. If meeting face-to-face is not possible, we can do email. You can scan or fax everything to me, and we can do it over the phone. But often a lot of questions get answered in that first initial meeting, so face-to-face is a good idea. Okay.
To get the pre-approval, are there things that people need to provide you with?
Yep, their pay stub. It's the same thing that you would need to apply for a loan. You'd need 30 days of pay stubs, a full bank statement, and proof of any assets, a copy of your driver's license, and if you were getting a government loan, a copy of your Social Security card.
Down to question 2, it says, what amount of down payment will I need?
And that again is depends on what kind of loan program you're looking for. The most conventional loans are 5% down, FHA is 3.5% down, and RETA is 3% down. And then there's rural development, which is 100% financing, but it's not in the larger cities. You have to be looking in a smaller community. And then there also is a VA loan for veterans, and that's 0%, but there's not a lot of...
Are those kind of the biggest loans?
Those are the main programs, yeah.
So if you're looking for something more specific, it's probably easier when you come in and kind of explain the situation to Christa. She can kind of guide you into the right program for you. Are there any grants or assistant programs available that people could qualify for? Is our next question.
Most of the grants and down payment assistant programs that are out there are income-based, so each one is kind of different. I know the city of Madison has 2 that for a family of 1 or 2, I think that maximum income that they could make together is $52,000. And then the Realtors Association has one that's $3,000. And WEDA also has one that if you're getting a WEDA loan, you can use in conjunction. All of them are, you pay them back when you sell or you refinance, but you don't make the payment in the initial years that you own the property. So it helps you keep your payments down.
Good. So question 4 we have, what is the minimum credit score required?
Currently the minimum credit score is 640. And that any government loan, you can get a loan at 640. With conventional financing, if your credit score is under 740, your interest rate's going to be higher, and if you have a lower down payment, it's going to be harder to get mortgage insurance. So if you have a credit score under 740, you may want to look at doing a government loan like FHA.
Okay. Sounds good. So question 5 we have, if I have any credit issues, can they be repaired and how?
Yes, you can repair them. It just depends on how involved they are. If it's just mainly a dispute between you and something on your credit report, the credit report will list addresses for anybody that's listed on your credit report. You simply could write a letter and dispute it, and then you get that information, and then you report it back to the credit bureau. If it's something a little more involved, there are credit counseling agencies out there that can help you get further things.
So basically, if I come in and sit down and meet with you, we pull my credit and we see maybe there's some issues. If they're not anything major, you can probably kind of tell me where I need to go. If it's something like a major issue that we need to take care of, you probably say go meet with a credit counselor.
Well, if it's an error or something simple, then you can probably deal with that with yourself. But if you've got some things that need to be cleared up, or there's some old collections or things like that, then I would suggest a credit counseling agency to you.
Okay, sounds good. And we have, will my loan be sold or serviced locally?
Just because of everything that's going on in the last few years, a lot of clients wonder that. If your loan is locally serviced, it means the person, like me, the loan officer, if you had any questions, you can call me and I can help you answer your loan. You'll be making your payments to River Valley Bank. If you were to sell your loan, which in most cases government loans are sold, you just go to a bigger entity, because government loans, that's just the way they work. They only get funded by a certain amount of lenders. Then they're sold, and sometimes people would rather get the best interest rate, and then that's another time a loan could be sold.
Okay. So the government loans, again, they were FHA,
Rural Development, and WIDA.
and
Well, WIDA loans we would service.
Okay.
So
actually at River Valley, you guys you'll service WIDA and you'll service your conventional loans.
right.
And the benefit of that is you can actually come in or pick up the phone and call Christa and have a direct local contact.
Right.
Right.
Yeah.
Okay. So question 7, we have what is an escrow account and will I be required to escrow? I guess first, can you just explain what an escrow account is? So I know a lot of people don't know exactly what it is.
An escrow account is also called an impound account. You sometimes see that on the internet or some of these forms. Is an account that the bank holds for your real estate taxes or your homeowner's insurance, and you pay a monthly fee, a portion of that fee each month into that account, and then in December or whenever your real estate taxes are due, they cut a check and pay your taxes. Or in the year that the month that your homeowner's insurance is due, they pay that in full as well.
Okay.
Anytime that you have less than 20% down, you're required to escrow for taxes and insurance.
Okay. So basically, an escrow account, if my mortgage payment every month is, let's say, $900, and my taxes for the year, we'll say $2,400, I'm going to put $200 extra every month on top of my $900. So I'm going to have an $1,100 payment, but they're going to put $200 in escrow to pay my taxes at the end of the year?
Yep, so then you're not coming up with money at the end of the year.
Okay, sounds good. Question 8, we have, when can I lock my interest rate in?
You can't lock an interest rate till you have an accepted offer on a property.
Okay.
And you can, there are locks that are as far out as 60 days. And basically, you can lock 60 days, 45 days, or 30 days from the closing date.
Okay, so let's say I have an accepted offer January 15th, but I'm not going to close until February 15th, so that's 30 days away.
Yeah.
So we're saying we can lock.
We can lock
at
any
30
time
days.
then, yeah.
Okay.
So if you were to write an offer on January 15th and you weren't going to close till April 1st,
Okay.
we would have to wait until we were in that 60-day range from your
To
closing
lock
date.
it. Okay. Sounds good. So question 9, we have, what other costs can I expect other than the down payment amount?
You'll have closing costs, which in Dane County, a purchase can be between $1,600 and $1,700, and that includes your title insurance, the closing fee, your appraisal, the origination fee, any fees, lender fees or title company fees. And then you'll also have your prepaids, which is setting up your escrow account, and then also the prepaid interest, which depending on what day you close, it could be a couple days interest, it could be 1 day interest, it just depends on when you close in the month.
Okay. So if we just talk kind of rough numbers, in Dane County, what do people usually look at for like just their closing costs that we can talk about? So typically like lender fees, title fees, we're looking at
$1,700.
$1,700. Then you'll have your down payment amount, and then obviously you have to figure out your escrow account amounts.
Right.
And that's what you'll end up having for closing and cost amounts.
Right.
So question 10, we have, who orders the appraisal and when and who pays for it?
The appraisal is ordered after you have an accepted offer to purchase,
Okay.
and it's not an inspection, it's an appraisal. It's something done typically after a buyer does an inspection, and it's paid for at the closing. It's in your closing costs.
Okay. And the purpose of the appraisal is?
To ensure that the lender is the value of the property is there.
Okay.
So, and
Okay, so we burned through these questions kind of quick. What you're going to want to do, just take this sheet with you when you go meet with your lender. Obviously have your bank statements, a month worth of bank statements.
yeah, at least 1 month of bank statements, and it has to be the full bank statement. If it says page 104, I need all 4 pages, and it also has to have the bank name, your name, and the account number. It can't just be a printout without your name on it.
Okay.
And 30 days of pay stubs.
Okay. So I guess if you have any other questions or anything, feel free to leave a comment below. Otherwise, give me a call, 608-576-0044, or email me, tjvitense@kw.com. You can find links on the website. Otherwise, if you'd like to set up a time to meet with Christa, what's the easiest way to get in touch with you?
608-661-3563, or you can email me at csweeney@rivervalleybank.com or christasweeney.com.
Okay, and we'll put little links right below the video so you can get in touch with her. Thanks.